what are some of the steps now that you use to kind of moderate the all in, all out kind of behavior?
Yeah. So one is I keep some money on the side in the bank. I don't have all my money in the market.
Mm-hmm.
In the past, I've said, oh, I'm going to sell some, I don't, should never have to worry about money again. And then the moment I see an opportunity, out goes that money. I put it
Yeah.
back right into the market because I can't, the thought of not trying to capitalize on every opportunity, like I just haven't been able to deal with that. And so now, and that's caused me a lot of stress. Like the fact that I actually have had moments in the past few years of I've been worried about money is a real shame because I shouldn't have to, after all these years of trading. And so one thing is having reserves so you can live your life and not worry about what happens in your trading account. You can go through a long kind of winter in trading and still live your life and not be, worried about, either paying a mortgage or taking a trip or whatever, whatever your life expenses are. Another thing is as I'm making money, I do pull money out of the market and just add to my savings. And I do that kind of on a regular basis. So whenever I hit like a threshold, and it's not like I take out all my profits and just play with the principal in a way, or the basis, because if you're going to grow,
Right.
you need to have you need to actually make profits on your profits.
Right.
But it is
Okay.
I'll take like 20 to 25% of my profits and pull that out of the market. So on the one hand, I'm not capitalizing my potential in the market, but that's because I'm preferring to kind of moderate myself and have some institute some self-care and say, you know what, it's okay if I'm not the richest guy out there, or I don't again capitalize fully on every opportunity. So I think having that discipline to pull money out of the market on a regular basis, if you are making money, is important. And
Well,
I never really did that before until recently.
Well, I think part of that too is as you get older, it becomes even more important.
Absolutely.
It's one thing when you're, trading in your 20s and you don't have that much money and you can kind of come back from you could blow up your account in your 20s and you've got a lot of time to kind of recover from that. But, I'm not calling you old, Charles, but
I'm old. Trust me.
we're getting up there.
I sometimes don't recognize the guy looking back at me when I wake up in the morning. I'm like,
so I mean, would you say that, part of that too is kind of a reflection of being at a different point in your life where, that kind of security becomes more important?
Yeah, I think that's a good point, but I think that is a good habit to have because I can look at, when I was trading 25 years ago and I was having some of my huge years early on, and the corrections that I suffered and the drawdowns that I took. This isn't my first rodeo when it comes to blowing up an account or near blowing up, or having a substantial drawdown of 50% or greater. I mean, that's happened over and over. And so I just think it's actually a good habit, even if you're younger, to pull some out of the market and pull some of your profits out of the market, and just, you don't need your entire net worth in the stock market. Buy some real estate, or just have some reserves. Have something safe out there. It's really and be able to do that without feeling compelled to put it back in because you see an opportunity that you just want more money for.
Right.
So it's really I think you have to build that habit, and I just think it makes sense because it's I remember my therapist was, we were talking about my trading, and I was talking about my last massive drawdown I took, in Tesla after I peaked in 2000, the end of 2021, when I was up, so much, 1,400% in 2000, and then another 200% in 2021. Like that on top of that, it was just,
Right.
the money was just so big. And she's like, any normal person would say, like, why not just take half out,
Right.
put it in a savings account, you'll never have to work again, and play with the rest, which was still a huge figure.
Right. Yeah.
And like it's almost embarrassing to say, yeah, I don't know why I couldn't do that. I mean, I actually do know why I couldn't do that at the time with all the work I've done, but just not being able to be kind of feeling satiated with my performance. Like I needed more. So that's something that I've kind of dealt with, that, once you're at a point in your kind of your self-actualization or just your psychology where you feel like you're enough, you don't need more, it helps in every aspect of your life, particularly trading, where you don't need to prove yourself. You don't need to fill your self-worth in any way. There's no hole in your bucket that you're trying to refill. It's just, you feel good, you're doing well. And trading is just an aspect of your life. It's not your whole life. It's not who you are. It's just a slice of who you are.
Mm-hmm.
So yeah, I mean, there's a lot of work to be done. I think there's too much emphasis on charts and chart reading and the technicals. And, this is a topic that just doesn't, I think, get discussed enough.
Right.
Because it's, managing your money successfully over a long, career in trading is a lot different than knowing how to read charts and, look for growth stocks and so forth. So, and you don't really realize it until you're in the thick of it.